Okay, so speaking of visionaries, we're going to invite up our next power panel. I'm going to hand you over to Steve, who is our worldwide head of sales, here to lead this session. So I'm going to invite on stage Marit Harm from Borgman Capital, Adam Beeler, who is head of institutional sales at Angel Oak Capital, Andrew Newton from Amplify, one of our valued clients, and Stephanie Mann, who is the Chief Strategy Officer at Live Oak Bank. And with that, I'll hand you over to Steve.
Thank you. Let everybody get seated. How's everybody enjoying the day so far? Good? All right. Thanks for joining us. We really appreciate it. Thank you guys. Adam. Okay, well, we're excited to have this panel with us today. I guess first off, we should probably do some basic introductions. You guys have a mic. We can just pass that along. Adam, do you want to start? We'll have you give us a...
Sure. Hey, my name's Adam Beeler, head of institutional sales at Angel Oak Capital Advisors. Angel Oak is a structured credit, fixed income asset management firm, everything from mutual funds to private equity style funds.
Hey everyone, Stephanie Mann. I work at Live Oak Bank. It's a small business lender in North Carolina with a national footprint. I'm the Chief Strategy Officer, which includes running our venture capital investing, corporate venture capital, our partnerships, and our incubation.
Is this thing on? There we go. Hi, everybody. I'm Marit Harm. I am the Fund Administrator and Marketing Manager at Borgman Capital. We are a lower middle market private equity firm based in Milwaukee, Wisconsin. New asset class client here. We just launched about a month ago.
Hi, everyone. Let's talk a little less loud. Andrew Newton with Amplify Capital. We're an early stage impact VC fund based in Toronto, Canada. And we've been with asset class for just over a year now.
All right, thank you very much. Welcome. Well, we're going to be talking about a few things today. It's pretty loud, huh? As it relates to digital transformation and sort of the journey that these folks have been on. With that, I'll just say, before we dive into the specifics of why you went through that digital transformation, maybe we could talk a little bit about some of the opportunities and some of the challenges that you guys have faced along the way and during your journey. So I've got some notes in terms of who I'm going to call on and the order in which we're going to go. So hopefully I can stay on track with everybody. All right. So given the changes in the economic market as we see it today and sort of all the things that surround that, maybe you can comment a little bit about sort of your LP journey and what expectations they have now on your firm. Has that changed? How's that been affected by where we are in the market today? I'll go ahead and get started with Marit.
Yeah, so a little bit of background on our firm. We were founded in 2017, so still relatively new in the grand scheme of things. And something unique about us is we're a fundless sponsor, so we do all of our deals on an individual basis. I'd say starting out, getting our LPs, everyone knows the founder, knows someone at the firm. That trust is there, that personal relationship is there. But that is really changing as we're going after that next-gen investor, going after an untapped pool of LPs interested in lower middle market opportunities. But I would say at the end of the day, no matter what your demographic is as an LP, you want your information in your portal to be accurate. You want 24/7 access to it. And you do want to still have that personal connection with someone that you can call.
Great, thank you. I'm gonna move to Stephanie now. Stephanie at Live Oak Bank is a very large investor. So as an LP, where do you see yourself in this mix?
Yeah, it was funny when we went through talking about the panel. So we are an LP in a number of funds, most notably Canopy Venture Fund. We're also a direct investor, so we get to see both sides and do both with great mediocrity from an administration perspective until we get ramped up here. From an LP perspective, and probably a number of you are LPs in some way, just really frustrating to have to go to lots of different places to get documents. Every time you bring on a new analyst, like the religion around the SharePoint file is like a real thing. If somebody's not saving documents to the right place with the right label, they've like gone into your email save box, you know, black hole. So as an LP, just having access to the information that you want to give the LPs, it's a really, really basic thing, but that's probably top of the list. And then second, we just love the communication we get from venture funds that use communication tools like Asset Class. So, you know, Canopy is communicating with us all the time, industry reports, calls with portfolio companies, learning opportunities, new investments. And so you feel a connectivity with them that I don't feel with the other funds that we're LPs in. Just because of that sort of constant flow of communication. And then the third benefit that that brings is it creates a community within the LPs themselves, which is really unique, right? Because there's a lot of knowledge and information and experience sharing among LPs that's really relevant. That's a huge opportunity for GPs to provide them.
Excellent, thank you. Andrew, I'll ask the same question to you. Have you noticed a difference in your LPs and what they expect from your firm these days?
Definitely echoing what my peers up here have said, is just the access to information and instantaneously or when they need it and in an accessible and easy to understand way. So before Asset Class, we did our capital calls and distributions via email, but we had an LP portal where they could download their financial reports, and there was like 2 or 3 different places where they would need to access information that we provided. And it wasn't easy to use. And then when you add that layer of their custodians or their accountants needing to access tax documents once or twice a year off your reporting cycle, but where do they access it and how can you do it in a secure way? Like those are all problems that we face and that our LPs faced. So everything being organized and reliable, because data veracity is of course an issue. If you can't rely on the data that you're reading, then we as GPs aren't doing our responsibility for our LPs. And then also when you go to market and you go to fundraise, when you start backdating and looking at all your data and you try to you try to tell that story, but what story is there if it's not accurate and if the information that you're given is just so sporadic and all over the place that that there's more questions than answers when you tell that story. So I think like LPs are really expecting that consistency and accuracy and reliability and access, which is a lot of the points that I noticed that Ferdy was touching on during his presentation as well.
Super. And of course, last but not least, Adam, I'll ask you the same question around LPs.
Sorry. Yeah, for us, I mean, it's the constant search for the investor. And as many of us in the room know, it's very hard to raise capital in lots of different environments, regardless of the strategy itself. So reducing friction points along the way, I truly feel, I'm leaning more towards the regulatory side. This isn't sort of like a nice to have. I think it's going to quickly become a must have. This is the norm. It's the LPs are demanding accurate data, which sounds very fundamental. Accurate data, timely data. Where can I go get? You know, we get the same questions asked every single year. Can you send a K-1s again? Can you download some information? Can I get you on the phone with somebody else? So the beauty of the way that we utilize the platform is to reduce those friction points and to truly strive to continue to want to be institutional quality. And by institutional quality, I'm meaning it's just making sure that this white glove service just continues. So for us, it wasn't this is neat, nice to have. It was, this is the way of the future. You must have this. if you're thinking from a communication, from investor relations communication, but now think about the regulatory scrutiny and, that entire side of the coin, which, makes us sleep better at night.
That's great. Good insight. So it seems like we might be in the right place at the right time then, is what I'm hearing. Pardon me?
That's what we're betting on.
Yeah, of course, thank you. Well, Ferdy spoke earlier to the panel about, about the changes in the regulations, around private funds and sort of the increasing, regulatory guidance that's coming out. I'm anxious to hear what your thoughts are on that. I'll go ahead and keep you on the mic there.
Yeah. Well, it's not going to get any easier. That's for certain. I mean, I was on a call earlier today, for you with the details, but about literally cell phone communication and texting, inter-company. And, you just start thinking about how much time I now spend with risk operations and legal as the person who's supposed to be in charge of the institutional capital raising. It's all now one. It's literally one sort of package, and it's investor relations. It's tied to the hip with compliance operations, back office accounting. And if any part of that doesn't work, it makes us look bad.
Stephanie?
Yeah, I mean, for us also, we're just in a highly regulated industry as a bank. And then add to that the fact that we're a public company, timely and complete information is just, it's expected in every quarter. So we have a lot of workaround processes that are in place to make sure that we can always do that every quarter. That I think, as Adam was saying, this is just the way we need to go, and the regulators and investors are just going to require it of us for sure.
Good stuff. All right, we'll switch it over to Marit on the regulatory.
Yeah, we're a little unique in that we're not a fund, but a quote from earlier this morning stuck with me. If you're not thinking about this now, you're behind. So happy to say we are thinking about it at Borgman Capital. Could always be doing a better job, but for us, it just comes down to over-communicating, making sure that there is that trail with our LPs of all of the interactions.
Good stuff. And Andrew, maybe you can wrap us up here on this subject.
Yeah, I think and it's probably a little different in Canada for how funds are managed or looked at in terms of regulation, but anything that happens in the States or Europe eventually comes into Canada. So we're definitely watching what's happening in the US, and then also trying to make sure that any information that we provide to our LPs, again, to my earlier point, is accurate and reliable, and that when it comes time for our annual audit, that we have all the documents and the process and the communications all lined up and ready for our auditor. Because I remember last year, we spent hours just combing through emails and going through attachments and looking for our diligence reports, et cetera, that could back up the decisions or the valuations, et cetera. So just staying on top of that to make sure that we can access it when we need it, and then that we don't get mixed up with anything or caught doing something unintentional that could bite us later on.
So you got to be careful, basically. All right, we'll move on to the next question. So when you think about world-class investor relations, what do you see as a team as must-haves, or maybe put it another way, what's most impactful? We'll start with Adam again.
Yeah, I mean,
putting you on the spot, Adam.
Yeah. Well, I think so. The way that we think about it is it's a branding exercise. So there's Angel Oak Capital Advisors, $17.5 billion of assets, been around since 2008, but it's the brand. So I sort of have this. If our marketing team was here, they'd see that all their eyes would be rolling right now because I say this way too often. But it's like from the branding side of things, is it performance? Why do people invest in you? Is it your performance? Is it your white papers? Is it your thought theory? What is the reason they're choosing you over somebody else? And if that sort of trust and integrity and that brand is not there for whatever reason, it's a tough road to hoe. You know, the panacea for us is you go to the consultants, and if the consultants sort of bless you and let you kiss the ring, then you can perhaps get invited to the next capital raising contest, so to speak. But all of these operational due diligence sessions that we do, it's a branding exercise. And so, you know, if the brand screams integrity, clarity, low friction, communication, liquid flow of information, then you know, our chances are going to continue to improve, to do well. But this is, like I said before, this is kind of where it's going, and sort of like if you're not on the bus, you're going to be left behind.
I mean, I think what's exciting here is that the very baseline opportunity is just really the basics, and that's huge, right? Like just the communication and DocuSign. Like, who knew we were all going to be, you know, in 2023 being like, just give us DocuSign everywhere. That would make my life so much easier, but it does. I mean, I get so many DocuSign requests every week, I can't keep track of them. And so when you talk about investor relations, I think there are like the ABCs that everybody needs to take care of, and that's where the industry's going. When you talk about world class, that's saying, all right, once we make life easier for the LPs, how can we make life better for the LPs? Like, what's the value proposition of being part of my network? And that's going well above and beyond communication and returns. It's knowledge sharing, it's trend in information, it's access to the really smart people making those investment decisions on a regular basis, it's access to their network. And so once the basics are done, if you could really like harness all of the knowledge and experience of these people that you're putting your money with, you know, that I think would create a ton of value for those LPs. And I think that's what we're looking for is, you know, something above and beyond the returns to the extent it's available.
That's great insight. And Marit, we'll keep on the same question.
Yeah, we're definitely just mastering the basics at this point in our journey. Our investors weren't necessarily asking for a new investor portal, but now that it's here, I think they realize what they had before wasn't the best. They love just being able to see their investment profile, their whole journey with Borgman Capital, and whether that's through them investing as an individual, as an entity, through their son's trust, their daughter's trust, and we have investors who do all of those. So just getting that clear picture with one login. And I'll echo DocuSign too. When we were looking at different options, it was really important that we had the integration with DocuSign to cut down on the back and forth, the emails, the errors, the things getting lost.
It's good that we have this on video because Ginger had to leave, and she would probably be very proud right now to hear all of this praise. Andrew, go ahead.
I think personalization or like that personal touch goes a long way too with best-in-class investor relations. So back when we were first started, it was just Catherine Wartzman, who was our managing partner, and she did everything manually. But she has such a good relationship with all of our LPs, and to the point where like they can call on us to ask questions. And now with Fund 2, and then looking ahead to Fund 3, when we're going to triple, quadruple our LP base. That's harder and harder to do. So how do you keep delivering that customized or personalized experience to each of the LPs where they feel special, they feel heard, you're answering their questions, you're to your point, Adam, your brand is just on point and polished, and in a scalable way, because Catherine always reminds me that I can't send all those individual documents when they're asked, that I need to keep pointing them to the asset class portal. And that's just the reminder that that anything that's easy to use or where their questions can be answered before they even know they have the question, and then they can still call on us for the other stuff, then we can deliver that personal experience and without reducing quality as we continue to scale.
That's great. Good insight. I'm gonna switch gears a little bit and focus a little bit of my questioning to the firms on the left as two firms that have just gone through a digital transformation, if you will, in the recent months, especially Marit in your case. You know, we're anxious to hear sort of some of your insights around that journey. And I'll start by asking you, preparation. You know, if you're about to go on that kind of a journey, what kinds of things would you be doing to prepare for that?
So it's funny because when we started onboarding with the asset class, I was still relatively new to Amplify. So I was learning as I was going, and I think when looking back, if I were to do it differently, it would be to prepare. Make sure that you have all the documents ready, or if you don't know where they are, you know where to find them. And then we were kind of living, thinking of what we want the LP experience to be as we were going through it. So like we built out a customer journey, and then we think of all the questions that our LPs ask, and then what information will we need to provide them, and then also touching base with the asset class team. What information do you need from us to onboard us, and then aggregating it all. And like I think I underestimated how much upfront work that would take. But luckily, Jen and Jason were fantastic, and we onboarded really seamlessly. But that's the biggest thing that I'm looking back on what I would have done differently to prepare, and it was definitely to prepare even more because it's going to be a big undertaking, and we only have 2 funds, so imagine if you have like 10 plus. So really excited for Fund 3 that we're going to onboard all our LPs at once, and there's going to be no backdating.
That's great. Marit, you want to?
Yeah, so I'm thinking back to just being tapped to go find a new investor portal, and now look, here I am. But I did a ton of demos with different competitors to asset class, and you just have to really understand, why are you doing this? It can't just be because the firm across the street has this platform that's better than yours, but really understanding our internal pain points, which were with K1s, with DocuSign, with having investors who invest as an individual, as an entity, as a trust, and everything is saved in Excel. So just knowing the right questions to ask as I was evaluating the different options. And I knew the implementation was going to be not fun. So I think we were actually pretty prepared when I came over to do the actual implementation and get everything moved over.
I've heard the same. I heard from our customer success team that you guys were very prepared. You know, I'll keep with you on this question, just to follow on to what we've already been talking about. But is there anything, if you're going to begin this journey, that you would focus on in terms of transformation of your firm?
If I were to do it over again?
Yeah.
I mean, you can always be more organized with your documents. We had to go in and rename thousands of subscription agreements and K1s from dating back to 2017. So now that we've done it, we're really glad we did. It's just kind of something you got to go through.
Yeah, agreed. Yeah. Andrew, you want to talk to that point? You know, what do you might focus on differently, or just focus on in general?
Yeah, I think like the same thing. When you said that about renaming thousands of documents, I was like, oh my god. Especially with our first fund that was in 2016. While we didn't have that many LPs, not everything was digital. So there were a lot of physical documents that we had to go through and then digitize, and which is fine. Like you got to do what you got to do. But that was definitely something that was a little bit more cumbersome. But now that it's done, now we have that information digitally accessible online forever and in a secure place. So, like, yeah, it's a lot of, it can be a lot of work and be cumbersome, but it's definitely a value added when you get through it. It's just in the moment when you're renaming the 15th or 100th subscription document, you're like, you wish it would be a little bit faster and smoother, but there's no other way to do it.
And you made it successfully, so.
Here we are.
Here you are. You know, I'll ask this, I don't want to labor this point anymore, too much longer, but were there any surprises? Anything good or bad? It could be whatever you just didn't expect. Any surprises?
We have several LPs that have reached out to us completely unencouraged or unprovoked, just to say that they love the platform and how easy it is to use. And you know, when you're on the back end and then every once in a while you log on to see what their experience is, like, you know, you've seen it so many times, so of course it's easy to you. But that validation that all the work that we put into creating this experience for our LPs paid off, and that they like it and it is easy to use, just reaffirm that we made the right decision.
Good stuff. Marit, anything to add to that?
We launched and had kind of a big IT issue on our end, and half of our LPs weren't getting the welcome email. So it was just another problem to solve, but working with the team, Anthony was great. We figured it out right away that it was a security blocker on our end. So good to know that we've got strong IT, but we figured it all out. And I agree with what Andrew said, is we've gotten unsolicited feedback that they really love the dashboard view of seeing all their investments.
Good stuff. Well, I just have a couple more questions for you, and then we'll move on. But how have your LPs responded since you've made this transition?
Yeah, I just kind of mentioned it as unsolicited feedback, great upgrade. They, again, weren't really asking for a new platform. This change was driven internally with some inefficiencies, but now that it is here, they see that what we were using before was basically just a data room, a place to dump their K1s and subscription agreements, and this just gives them such a better experience. And we will be doing our first fundraise with asset class in the next couple of weeks here, so I think that will be just a night and day difference for our LPs, and I'm excited to go through that as well.
We're anxious to hear how that goes, really. It'd be exciting. Andrew?
So similar, our LPs were pretty ecstatic, and we're also fundraising now, so I'm really excited to go through that process and see how easy it is to do. On the other end, though, is like, you know, when we look at companies to invest in, we look at the technology readiness level. So like, is the market ready for the tech, and is the tech ready for the market? And you touched on it earlier, is the demographic of some LPs. There was a little bit more hand-holding, and they were a little anxious when they saw the new platform because they had to learn something new. But then once that you get through that learning curve, then it's just positive experience for everyone. So.
Great. One last question for Marit. I'll just ask you, you know, Salesforce, everybody's familiar with Salesforce, and if you implement it in your company as a sales, you know, CRM tool, the only time it's really successful is if you use it. So how is your firm, you know, adapted to this new technology?
Yeah, I'd say, I mean, that's been another surprise, is that, okay, getting the LPs onboarded was the easy part. It's cleaning up our house, making sure everyone is using this big investment that we now have. So that's part of my role, is just to make sure that we are using asset class to its fullest, being someone who's available to train everyone. I don't want to be a crutch and be the one that does everything for them, but it's, you know, it's such a robust, comprehensive platform. There's a lot to do, so I do want to make sure that we are using it to its fullest. I'd say we're at the beginning of our journey with the CRM. A lot of people at our firm have never used one before, so work in progress there.
Good stuff. Well, we'll switch gears here again. Just one or two more questions. We've got to wrap it up here. We've got another speaker coming up, but both Live Oak Bank and Angel Oak have been are investors in asset class. What did you guys see in the trends of the industry or in InvestTech that led you to investing in us and basically in this sector?
You guys are Yeah. Well, I wish there was a really creative story about the original seed dollars that came in, but our co-founder Srini Prabhu and just thought it was really neat. It wasn't until, so again, I wish there was a better story there, but he was just blown away at what they were doing, and he usually shoots ahead of the runner anyways, so the early adopter there. But then when he asked me if I could talk to some folks that I knew about a potential next round, that's when I knew I needed to bring in some big guns that really knew what they were doing. And so I called a mutual friend of ours who works with Stephanie, and I said, you got to take a look at this. We need this. Is this something you need? And I think I talked to him for about 60 seconds, and he said, you need to come up here. And then I knew it, or was smart enough to hand it to her, just like I just did with the microphone.
Yeah, so from our perspective, the Live Oak Bank story is inextricably tied to Force.com. In 2012, we wrote the code for what's now nCino because we needed great loan origination software that could do SBA 7A loans across the country, and it didn't exist. And Salesforce was pretty new, and it was really accessible and easy to build on. And so we built what was game-changing for us and game-changing for the industry with a relatively light lift and something that a lot of banks have obviously deployed as a public company now. And so that was really the foundation of the introduction, is that these mutual big fans of the kind of creativity and flexibility you can get from that platform while still having the security and the support and the growth opportunities there. I think on top of just the Force.com piece is we had a venture capital fund, right? So we have Canopy Ventures, 2 funds exist, $1.5 billion asset under management. And because we think we're so, friggin' good at Salesforce, we went ahead and started to build our own platform. And we, got as far as naming it and talking about how good we are at it. And then this came along and it was like, whoa, this is a lot more comprehensive. They've got all this stuff on the LP side that we haven't even thought about. And so from our perspective, it was an opportunity to actually stop building and start investing in a team that could build something much more comprehensive, much more modern, that would take the time to do all these important integrations and all of these great things. Think about the network effect. There's some scars you can get from building and using your own software, and one of them is it's highly customized just for you and doesn't continue to innovate at the rate that the market does. And so, we just see this as something that is, really fundamental to the business we're trying to do, that is being built the right way by the right team. And so we were really excited to invest in them.
Good stuff. And I appreciate you bringing up nCino. We feel like we're on the same path as nCino on the private capital side, so we'll look for that. We have time for one more question for, okay, Adam and Stephanie. I'll just ask you guys real quick, rapid fire question. Being in the industry, are there any trends that you see that are out there that firms that are looking to go through this transformation should be mindful of, or should follow to have better LP relationships and to be competitive in the marketplace?
Yeah, I think you guys touched on it all day, is that the bar is just higher than it used to be. You used to be able to, and I'm in banking, so I've been saying for years, you just have to be faster than the other guy to outrun the bear, right? And the expectations have just gone way up, and that's courtesy of the generations behind us. It's courtesy of great consumer products out there. It's courtesy of really great fintechs, things like Plaid, that actually make user experiences fundamentally different. And so I think the bar's just gone way up, and I think that's terrific.
Adam, any trends?
I think it's lots of private equity and venture capital go institutional, raise money institutionally. And then you've seen this wave of even KKRs and Apollos all say, you know what, we should probably go look at this $5 trillion retail market over here. Maybe we should focus on that. How do I do that? I have to get distribution. How do I get distribution? Can I rent it? Do I have to buy it? So, we started off high net worth retail, then went institutional, so we sort of did it the opposite way. But I mean, making the customer experience to a larger audience more enjoyable is part of the battle, because we also kidded at sort of internally. Lots of times when you're going and talking to an institutional allocator, the answer's already no. It's just, thanks for coming by. This is, you just either reconfirm something that I already invested in, or I just wonder a little bit more. So if you can sort of get those friction points down lower of customization and a better experience, then that ultimately means more capital, which is what we're all trying to do.
Excellent. Great insight. Really, we appreciate everything you guys shared with us today. Thank you for being a part of this, and thanks for taking the time out of your schedule to join us.
Well, thanks very much to everybody on the panel. It's extremely gratifying to hear the experiences of our clients, and gracious of you to say such nice things about your experience. I know it wasn't all plain sailing, but I'm glad as a team collectively we've managed to work to get you guys live. And it takes early adopters for a company like this to come to market. It's easy with the benefit of hindsight, to look at the company as we stand here today and making the progress that we are. But many of you, including Greg over here, we're going to talk a little bit about your experience a little bit later. You're not aware of this, but I will be. It takes some people who are willing to come with us on this journey. And we are 10 times better today than we were a year ago. 10 times better than we were the year prior to that. We are a work in progress, but I think we stand with a product today that is world-class. I think the experience is incredible. We're going to be sharing with you in the final session from Mark just after a break here. We're going to break here for about 20-25 minutes, come back at 1:45. But Mark's going to be sharing with you some of the things that we're working on further down the line here, and I think that's just incredibly exciting as well. But it's our clients, the input of our clients, that really makes this company, and so I'm incredibly grateful to you guys. I'm incredibly grateful to our investors in Live Oak Bank, in Canopy, and in Angel Oak, and for you guys to be here today means a lot, so thank you very much. Okay. So with that, we'll break now. We'll come back here at 2:45. We're going to be joined for a fireside chat with Gene Ludwig, who is the CEO of Ludwig Advisors, former comptroller of the currency under the Clinton administration. I mentioned him this morning. Incredibly interesting guy. Had a great conversation with him last week, and I can't wait to sit down with him. So if you come back here at 2:45, we'll pick up the conversation then. Thanks.